Hi everyone, I am Profitable Trader. In this video, we will examine the reason why some investors who invest in unit trust fund lose money. I will share a big short experience on how to achieve long-term gains in the market at the end of this video. Please remember to stay tuned until the end of the video. Let's start by discussing their unit trust company. The core business of unit trust company is to professionally manage unit trust fund, invest in a diversified portfolio, and effectively minimize risk and optimize returns. Please keep in mind this crucial point. Professionally manage unit trust fund and effectively minimize risk and optimize returns. If the unit trust managed fund are not profitable, the company's fund won't be invested by any investor. The unit trust company will eventually collapse. Many unit trust funds have gone through the following financial crises over the past 40 years. 1987, stock market crash. 1997 to 1998, Asian crisis. 1999 to 2000, the internet bubble. 2007 to 2008, global financial crisis. 2011 to 2012, European sovereign debt crisis. 2015, China's economic slowdown. 2018, US-China trade war. 2019 to 2022, COVID-19 pandemic, and present conflicts between Russia and Ukraine, as well as the recent rise in inflation. Are these unit trust funds currently profitable or losing money? Let's examine the performance of this unit trust fund over the past 40 years. Despite battling many financial turmoil, unit trust funds are still gaining profit and rising higher and higher. So, why do some investors still lose money investing in unit trust? Common reasons why unit trust investors lose money are as follows. 1. Fear and panic. 2. Failure to implement investment as planned. 3. Selling off while portfolio at loss. Because some unit trust investors anticipate smooth long-term returns on their investments, gain profit months after months and years after years. However, the market is volatile. Their investment portfolios will momentarily lose money as the market declines. In addition, at this time, they read or heard some negative news which frighten and alarm them. Investors can eventually achieve their investment objectives as long as they follow their investment plans. On December 1st, 2022, unit trust funds were still falling. Investors were panicked. I posted on Facebook that the Federal Reserve has started to slow down the pace of interest rate hikes and can put savings in unit trust funds to generate higher returns. Those who follow me on Facebook afterwards get in touch with me for more details. They have so far generated a sizable profit. Many unit trust funds have since gains of more than 20% and more than 40% since the beginning of 2023. The failures to invest according to plan and the decision to stop making additional investment after experiencing brief losses in their investment portfolio are the second reasons why unit trust investors lose money. Based on the investors' anticipated regular investment and investment time horizon, unit trust consultants suggest a suitable fund portfolio. Before investor begins investing, investor and the unit trust consultant build a regular and long-term investment plan together. Every 3 months, investments are routinely transferred from the Employees Provident Fund (EPF) to unit trust funds. The investor's fund portfolio briefly loses money as the market declines. At this moment, they are afraid of losing more money. They feel that keeping their money in EPF instead of making regular investment in unit trust will yield greater return. By refusing to keep making more investment at lower prices, this action prevented the investor from having the opportunity to average down the unit price. Investors' fund portfolio will take longer to turn profit because the average price is not lower, and the profit they can generate are also lesser. However, we observe a different scenario. The average price can be lower, the time needed to achieve profit is shortened, and greater gains can be obtained if investors continue to invest frequently at lower prices. Although unit trust consultants with strong investment knowledge and experience can offer better market information and more accurate predictions of market trends, but nobody has the ability of 100% accurately predicting the market's future trend. As a result, money and positions management is crucial. To ensure that we can lower the average price, we can enter the market in batches when the market retreats. The market will eventually recover because the unit trust's long-term performance will ultimately reflect its underlying economic fundamentals and earning growth. Our portfolio will make money as long as the fund keeps growing. Exit the market when their investment portfolio is losing money is the third reason why unit trust investors lose money. When investors sell off their unit trust investment when they are losing money, they miss out on the potential reward of a recovery. This concludes the outcome of the investment loss, and there's no way to recover. Look at what Warren Buffett had to say about the drop in stock prices.
I'm not recommending that people buy stocks today or tomorrow or next week or next month. I think it all depends on your circumstances, but you shouldn't buy stocks unless you expect, in my view, you expect to hold them for a very extended period and you are prepared financially and psychologically to hold them the same way you would hold a farm and never look at a quote and never pay it. You don't need to pay attention to them. I mean, the main thing to do, and you're not going to pick the bottom, and nobody else can pick it for you or anything of the sort. You've got to be prepared to, when you buy a stock, to have it go down 50% or more and be comfortable with it as long as you're comfortable with the holding. And I pointed out, I think a year, maybe 2 years ago in the annual report, well, just the one before this most recent one, I pointed out that there have been 3 times in Berkshire's history when the price of Berkshire stock went down 50%. 3 different times. Now, if you owed it on borrowed money, you could have been cleaned out. There wasn't anything wrong with Berkshire when those 3 times occurred. But if you're going to look at the price of the stock and think that you have to act because it's doing this or that, or somebody else tells you, well, I mean, how can you stay with that when something else is going up or anything? You've got to be in the right psychological position. And frankly, some people are not really careful. Some people are more subject to fear than others. It's like the virus. It strikes.
We should learn from Warren Buffett and execute our investment plan with patience and discipline. The above sharing is solely my personal view and opinion, not as investment advice. Past performance of the fund is not indicative of future performance. Finally, I wish everyone success in your investments and in achieving your financial goals. Please like and share if you find this type of video is helpful so that more people are able to benefit from it. Remember to subscribe and hit the bell button so you won't miss the upcoming video. Until the next video, take care.